Good morning, everybody. We have a mixed trade in the grain markets here early on Tuesday morning. It is 6:30 a.m. Central Time. March corn futures down 3 1/4 at 420 3/4. January soybeans down 5 1/4 at 1164 1/4. March Chicago wheat up 5 cents at 601 1/2. March Kansas City wheat up 6 at 568 1/4. March spring wheat up 4 1/4 at 561 3/4. NOPA will release November crush data later this morning. This will be out at 11 o'clock Central Time. Traders estimate that NOPA members crushed 180 million bushels of soybeans in November. If realized, that print would be down 2.8% from the all-time high that was printed in October, but up 9.2% versus the same month last year. So this would be the best November crush on record if realized. As I've discussed a little bit in the past, this sharp rally in soybean prices has done very little to curb demand. I mean, it's done absolutely nothing to curb demand via domestic processors. Maybe you could make the argument that we've curbed a little bit of export demand here over the last few weeks, although I think that has more to do with a forthcoming Brazilian crop. So in any case, we're looking for another strong crush number. USDA projecting record crush for the year. This Russian wheat export tax continues to be a big story that circulates. I think it's kind of a double-edged sword. I mean, short term, there's going to be some exporters in Russia who will kind of hurry to get some wheat out of the country before the tax goes into place on February 15th, or the proposed tax at least. And then after that, there's a very good shot that places like the United States, some of your other exporters, will pick up some additional business. Now, at the end of the day, keep in mind that we have projected a record high global stocks to use ratio in wheat. And the Russian export tax does not take wheat off of the balance sheet. It simply reshuffles what we have. It's going to drive some additional export business to the U.S. in all likelihood, which is positive. I'm not going to say that this is a negative factor for prices, but I'm not going to say that it's overwhelmingly positive either. Some Brazilian soybean production estimates continue to fall. Well followed private group Ag Rural pegged the crop at 131.6 this week. That's down from 133 previously. They said that they may make some further revisions later this month, depending on the weather situation. Now, speaking of Brazilian weather, looks like a lot of key areas will be dry during the next 7 days. A lot of Mato Grosso, for example, will see limited rainfall over the next week. And then you've got some rains that return in the extended forecast. Between now and the end of the month, it looks like they'll see plenty of rain across most of the country, although long-term forecasts, of course, are always subject to change. The EPA will attempt to finalize next year's biofuel volumes by December 31st. They missed the original deadline, which was November 30th. The process was apparently complicated by COVID, volatility in the fuel industry. You've got a new administration headed to the White House, but it looks like they're going to try to get this thing done here in the next couple of weeks. China says that its hog herd has recovered to 90% of normal. So, of course, the story going back a couple of years now is that African swine fever wiped out 40 to 50% of the hog herd, depending on whose numbers you believe. China has made some massive efforts to rebuild that hog herd, all sorts of subsidies, government support, policy support. Chinese officials say that production capacity should be fully recovered by the middle of next year. Maybe that's a stretch, but that's what is being reported. The corn market, we're about 5 cents away from some big support on the charts. The nearby March contract went down and traded that 414, 415 area on a couple different occasions and bounced on both occasions. And we could go back down there and test that out. Below that, there's a big low from back in, I think, late October at 396 below the March futures contract. That would be your target if some real heavy selling were to emerge. Exports are a friendly factor. Ethanol is a potential negative. If you did not watch last night's live stream with Jordan Fife, it's called Ethanol Problems. It's on the YouTube channel. It's on Facebook, and it's on the podcast. Make sure you check that out. There's some excellent information in there regarding the ethanol situation. Jordan's a cash ethanol trader, has been for a long time. Had some really good insights. So make sure you check that out if you have not already. But we have some potential problems with ethanol moving forward, and we discussed this last night that, ethanol production margins during the first quarter of next year are not good. And this is a problem. Now you look at the corn market and the large speculators funds are still very heavily long. They're kind of unfazed by this deal. And a lot of that has to do with the fact that exports, a much stronger export program has kind of picked up the slack that ethanol has left here. Soybean market, I would argue, is acting phenomenally well. You have the emergence of what I would call a few bearish factors. Export sales have declined drastically the last 5 weeks. South America has weather issues, but not a disaster by any means. Still, you've got a very, very tight situation here in the U.S. I mean, stocks to use ratio, I think, being projected at like 3.8%, which is the second lowest, I think, dating back to at least the mid-90s. So you could certainly make the argument here that based on that alone, the market is underpriced. But there's not always a direct correlation between ending stocks or stocks to use ratio and price. It does not have to work that way. The wheat market's seen some volatility. We saw a sharply lower trade yesterday. I don't know if you call that a buy the rumor, sell the fact deal or whatever you want to call it. But we sold off sharply yesterday following the rally late last week. And now we're back just a little bit higher here this morning. Cattle market finished mixed yesterday. It was a mixed bag. We'll see what develops here today. We've seen some continued weakness in the boxed beef market, which I suppose is problematic. I know that that's a seasonal deal, and I know that happens in a lot of years. You'll see the boxes decline kind of late in the season here or in the calendar year, but this has been an excessive decline. Ahead of the cash open, the Dow's up 180 points. The S&P is up 25. The bond's about flat. U.S. dollar is down a little bit. Crude oil's up 20 cents. Remember, if you would like some more information from me, go to my website. It's www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, you sign up through PayPal, and it'll bill your credit card automatically every month. I'll send you my morning email. It goes out every day at 6:30 Central Time, and my text message service. I will let you know exactly how I'm marketing grain throughout the year. Corn, soybeans, wheat, broken down by crop year, by percentage. We talk about capture and carry. We talk about some different option strategies, although that's not a requirement by any means. You don't need to have a trading account. Certainly check this out if you're looking for a little bit of improvement. Everyone have a wonderful day today. I will talk to you same time tomorrow.